Hey everybody, welcome back to the Velocity channel where this is your bridge to financial freedom. Today I'm going to go ahead and solve a real problem here, and you're going to notice something different that I'm going to be doing. But before we get into that, let's go ahead and like, share, and subscribe so that everyone across the world, across the universe, intergalactic planetary systems can know the power of velocity banking. Are you ready? All right, let's go. Now you'll notice here that I've done something a little different. The only interest rate that I've put up is one of the home loan. You know why? Because when you're doing velocity banking, it doesn't matter what the interest rate is. You're not going to pay that anyway. All right, so look, $304,724 in the home loan at 3.75% interest. We're going to get it less than that. $2,269 each and every month. We have another loan here, $1,898 at whatever amount the percentage is. We calculated it out, right, Shannon? And it was about 8.16%. All right, $640 each month you're going to be paying. $23,059 at whatever percent we've calculated out. Okay, you didn't put the interest rate in there, but we went ahead and calculated it, and that one was 8.4%. For the $629 each and every month. We have another loan of $12,449 at whatever percent, $130 each month. Let's go to our lines here. Now notice she has small balances here, okay? All right, we're going to need you to do something. We're going to need you to deploy these soldiers. That's why you have them. Most likely this is an unsecured line of credit, which means someone trusts you with their money, okay? What that means is you got to use their money to make more money. So we're going to get into that. Minimum monthly payment, $46 each month. We've got the limit here on another line of credit of $11,000. The balance is $46.80. The minimum monthly payment is $152 each month. The limit on this one, the next line of credit, is $19,000. We have the balance of $5,022 and the minimum monthly payment of $167. Now notice this one up here, okay? And then I want you to notice something else. Notice all these lines. So we have about an equal amount of lines and loans, which is good for you. Now, we have a system that you can plug in all this, and it'll actually tell you how to get rid of all of this. Not in 30 years, come on. Not in 40 years, not in 50 years. I know someone, I was talking to a client of mine, they were on a 50-year plan. Can you believe that? It's not going to be 50 years, okay? It's going to take anything between less than 5 to 10 years, anything between there, all right? And this is how we do it. We're going to look at these loans and see which one is closer to our freedom zone. Does that make sense? So we want to knock out the least efficient or the most inefficient loan on this side by our line of credit as possible. All right. So we're going to look here and we're going to see which ones are going to be the ones we get rid of. How do we calculate that? How do we prioritize our loans, CJ? I'm so glad that you asked that, because we're going to run it through the CFI, okay? Now, before we do that, we do want to go over what they have, which is the cash flow of $1,148. They do make an income of $5,088 each and every month. Now, let's go ahead with the cash flow indicator. Remember how we calculate that? Loan balance divided by the minimum monthly payment. So you take these loans, okay, and you put the loan balance right on the numerator, okay, and then you put the minimum monthly payment at the denominator, right? You calculate that out and you give me some numbers. Most likely this one will be above 100, which means you're in the freedom zone. If any of these are between 0 and 50, you've got an inefficient loan, and that's your priority. If they're between 51 to 59, then that's your next priority, okay? Maybe you want to talk to the bank. You want to let them know, hey, can we restructure this loan? Or can I get a lower interest rate? Or can I, dare I say, refinance, all right? If you're not that savvy or you are a beginner in velocity banking, you can go that route if you'd like, or better yet, you can talk to our team so we can get you eliminating these loans and then using these lines of credit as assets for you. Now, what are we going to do to the most cash flow sucking loan? What's our next step? It's to choose a velocity banking tool that is going to be the best to eliminate with. All right. Now, we have $19,000 here, and that is the most on our lines of credit. So what should we do? Because remember, some of us care about what? Credit utilization. Okay, we care about our payment history. If you want to keep below that 30%, then what you can do is going to take out an amount that is comfortable for you. Okay, so take out maybe $5,000, right? If you want to, you can do the whole kabang. You can do the $19,000, and you can actually get rid of this loan, $12,449. Or watch this, you can take the $2,000 and get rid of this loan. You're almost done anyway, okay? And congratulations, all right, Rosie, for getting rid of this. That, I think it was the starting loan was like $23,000 something. You got it down to $1,898. Look at how much is going out, okay, versus how much you've got left. Perhaps, and this is just a big perhaps, you want to deploy 2,000 of your soldiers from this account. Get rid of this so that you can have this. Now, Rosie, I know you need $640, but instead of asking someone else for it, won't you just go ahead and deploy 2,000 soldiers, all right? Send them over there to the box, to the bank, and let them give you $640 each and every month. This is what happens with your cash flow if you were to do that. Can I do it backwards? $1,148 plus $640? All right, it's going to be $1,788. Man, you are the hero of the family. So what are you going to do with that $640? Oh, you're going to go ahead and eliminate another loan? Man, Rosie, I think you've got it now, all right? Let's go ahead and continue to eliminate all these loans that are sucking the cash flow from your bank account, from your family, from your community, and let's put it back in your account. How does that sound? That sound okay? Now remember now, when this number goes back up, okay, because you're going to be also paying the monthly payment as well, right? Because you can, absolutely. Not only will you chunk an amount to get rid of these debts, you're also going to be making sure that you pay this down by what? How are you going to pay this down, this line of credit down? Because you just use line of credit for the loan. Okay, there you go. Income. You're going to place that income into the line of credit, and then you're going to pay your expenses from the line of credit, which leaves an amount there. What amount is that? $1,788. And the more money you have, okay, left over in your line of credit, the faster you'll see that line of credit go back up to where it's supposed to be. And, oh, by the way, since you're using your line of credit so wisely, you may get a call from the bank. And they may say, ring, ring. You know what? You've been so good of a steward with your line of credit. We would like to increase. Somebody say it with me, increase. Increase your line of credit. We see that you're at $19,000. We were thinking that you could go to $25,000. What do you think about $30,000? What do you think about $35,000? And then Rosie, right? Huh? And the mister can be like, hey, that's a great idea because we got another loan over here that we need to take care of. And the bank's going to be like, what? And you're going to be like, never mind. You know why? Because you know about the power of velocity banking. You know about eliminating, canceling the interest. You're becoming an interest cancellation specialist because you've dug in, you've done the work, you've done the calculations. And that's what I want you to do. I want you to take a picture of this. I want you to lean into this video. I want you to lean into this education so that you can see the power of velocity banking yourself. Now, please speak with my team. Please speak with my team, because I don't want you writing things out. This really isn't the age of writing all the calculations out. We are done with that. Do you remember the chalkboard? I don't know if any of you know about chalkboards, and that's okay, right? No judgment here. But back when I was growing up, we had a chalkboard. Teacher would write on the board. Typewriters, Apple was just coming out. You know what I mean? We had dinosaur computers. That's no longer the case. Okay, before we had checkbooks. Anybody know about checkbooks? We know about ledgers. Okay, that's no longer the case. Now, many of you are still trying to divide up your income, segregate your income. You're trying to pay the minimum monthly payment on your line and minimum monthly payment on your loan. That's no longer the case. You don't have to do that anymore. We have a system that I use, that my whole team uses, that all our clients use. And we've paid off over $2.4 billion of people's debts because of a system. Check this out, guys. Solar system, cardiovascular system, skeletal system. You know what those all have in common? They're all systems. And when they work perfectly, so does the universe. So does the body. So does anything else. If you got any questions, go ahead and give them to me. God bless you, and we'll see you in the next video.